Hello, everybody. Welcome back to Mynt. My name is Dean. In today's Learn With Me episode, we're going to discuss the Fair Credit Reporting Act. And for those of you who don't know, the FCRA Act, or FCRA, is a piece of U.S. federal government legislation enacted to promote the accuracy, the fairness, and the privacy of consumer information contained in the files within the consumer reporting agencies. And for those of you who don't know, the consumer reporting agencies are the TransUnion, Equifax, Experian, etc. So this act was intended to protect consumers from the willful and or negligent inclusion of inaccurate info in their credit reports. So in normal people talk, the credit reporting agencies need to have accurate info or they're not compliant with the Fair Credit Reporting Act. So there you go. It was FCRA regulations are intended towards, they regulate collections, dissemination, and the use of consumer info, including consumer credit information, together with the Fair Debt Collection Practice Act, FDCPA, and the FCRA forms the foundation of consumer rights law in the U.S. So it was originally passed back in 1970 and is enforced by the U.S. Federal Trade Commission and the Consumer Financial Protection Bureau and private litigants, of course, which you'll see, in court cases, etc. History. The FCRA Act, as originally enacted, was Title VI, publicated in a bunch of different statutes, yada yada yada, bunch of legal talk, and it was enacted October 26th, 1970, entitled "An Act to Amend the Federal Deposit Insurance Act to require insured banks to maintain certain records to require that certain transactions in the U.S. currency be reported to the Department of Treasury and or any other purposes." So thank God they shortened it down to the Fair Credit Reporting Act, okay? So FCRA was one of the first instances of data protection law passed in the U.S. during computer age. The findings of the U.S. Congress that led to the act and the act's key regulatory innovations set the direction of information privacy in the U.S. and the world for the next 50 years. Key among these innovations was the determination that there should be no secret databases that are used to make decisions about a person's life that individuals should have a right to see and challenge the info held in those databases, and that info is such databases should expire after a reasonable time. So for all those people in collections are like, oh man, 7 years it falls off my credit, you can thank the Fair Credit Reporting Act for that. Consumer reports, commonly referred to as your credit reports, again, Experian, TransUnion, Equifax, I think people have credit monitoring through like Credit Karma's, XYZ. So credit reports contain info about your credit and some of your, your bills, your trade lines, things that you're funded, your car payments, maybe even your rent. If you don't pay, you can sometimes see it, some medical bills and XYZ car payments, mortgages, yada, yada. So that all appears on your credit report to create your credit score, all regulated by the Fair Credit Reporting Act. So again, if you see something on your credit report that is not accurate, dispute it with the agencies, the Experian, TransUnion, Equifax, as well as the financial institutions that are reporting, because the FCRA Act requires that within 30 days of a dispute that they do a reasonable investigation and respond with, their answer. And if they don't respond to your dispute within 30 days, the FCRA Act requires them to remove the delinquent information. So if you're disputing that your, car payment showing 2 months past due and it's not, and they don't respond within 30 days, they have to remove it. But if they respond within 30 days with supporting documentation saying, yes, this is accurate, then again, you have to respond with supporting documents. So it's a back and forth, or you can go to court and then the litigators will take over. But inaccuracies in the Consumer Report in a study back in 2015 released by the Federal Trade Commission show that 23% of consumers identified inaccurate info in their credit reports. Key, everybody should be monitoring their credit reports. It's you're a fool if you don't. I hate to break it to you. So, under the Fair and Accurate Credit Transactions Act, FACTA, an amendment to the FCRA Act passed in 2003, consumers are now able to receive a free copy of their consumer report from each reporting agency once a year. The free report can be requested by telephone, mail, or through government authorized websites, including annualcreditreport.com or through, Experian.com, TransUnion.com, etc. So civil liability when it comes to the Fair Credit Reporting Act, the FCRA regulates, one, consumer reporting agencies, two, users of consumer reports, people checking your credit maybe to do business with you, and three, furnishers of consumer information. Those are the banks that lend you the money that are reporting the data out. They're called data furnishers. If a consumer rights under the FCRA are violated, they can recover any of the possibilities such as actual or statutory damages, attorney fees, court costs, punitive damages if the violation was willful. The threat of punitive damages under 1681N of the FCRA Act is the primary factor deterring erroneous reporting by the reporting industry. So, right then, financial institutions don't want to pay you off. So, again, that kind of kicks them in the butt to make sure that they're accurately reporting, correctly. So, and government agencies audit them as well, and they don't want to pay government fines either. So, the statute of limitations requires consumers to file suit prior to the earlier of either 2 years after the violation is discovered or 5 years after the violation occurred. So, 2 years after it was discovered or 5 years after the violation occurred. Consumer attorneys often take these cases on a contingent fee basis because the statute allows a consumer to recover attorney fees from the offending party. So, all those consumer litigators, shout out to you guys. I deal with you bestadios all the time. Lawyers are always fun to talk to. They just talk about themselves and their law degree. Congratulations. Not all attorneys, though. I will say that there are a few cool attorneys out there. Very few, but there are some. But so users of consumer reports, users of the information, for credit, insurance, or employment, purposes, including background checks, have the following responsibilities under the Fair Credit Reporting Act. Users can only obtain consumer reports for permissible purposes under the Act itself. Two, users must notify the consumer when an adverse action is taken on the basis of such reports, so they must notify you. And three, users must identify the company that provided the report so that the accuracy and completeness of the report may be verified or contested by the consumer. So, for example, hey, we pulled your report through Experian, and they're showing some funked up situation, so go dispute with them. So gives you heads up. So again, the FCRA is kind of like your guardian angel as a consumer as well. Employment background checks. Employers use consumer reports to screen job applicants or employees, and the employers must follow specific procedures as well. So they have to get your written permission, and like the e-signatures will sign off and account for that these days. Two, they must tell you how they want to use your credit report. So why do they want it? Three, they must not misuse your information. If they do, you can sue them. Four, they give you a copy of your credit report as well. And if the employer decides not to hire or fires you, they still have to give you the report, even if you get fired. So give you an opportunity to dispute the information contained within your credit report before making a final adverse decision. So if they're going to fire you, they're going to give you the report. You can dispute the adverse action on your report and play that out before they fire you. So again, the FCRA Act has some good loopholes to get in and protect you as a consumer. So for furnishers of the information, the banks reporting your info, the creditors, as defined by the FCRA, is a company that furnishes information to a consumer reporting agency. Where creditors with a consumer has some sort of credit agreement, credit card, auto finance, mortgage, etc. Even deposit accounts are covered under the FCRA, because a lot of people, if you ever had a charged off checking account, you're on check systems. That's a reporting agency. So even that's covered by FCRA. So if they don't respond in 30 days, they can delete it, dispute it through check systems and the bank in question. So other examples of info furnishers are collection agencies, third-party debt collectors, municipal courts reporting on judgments of some kinds can look at it. And then, lenders have an important role to play in ensuring credit reports are accurate because they're the ones that are giving the reporting agencies the info to calculate your credit score. So if the bank are giving out false information, it's just fucking everything up. And, they need to have proper controls, procedures in place to ensure that they're accurately reporting on behalf of the bank, to protect the bank, its assets, and the consumer. It's named to the game. We put all of our money in banks. We at least want to make sure that they have compliance oversight and are doing the right thing and accurately reporting account behavior. Even if it's negative behavior, you should be glad that they're reporting accurate, because if the whole world was as fraudulent, even though it is fraudulent, but if it was just a free for all, we'd be a lot worse off without this Fair Credit Reporting Act. We'd be up a creek and just drowning. But, lenders have an important role to play. They have to provide complete and accurate info to the credit reporting agencies. Some do it daily, some do it weekly, some do it in monthly batches. So too, they also have to investigate consumer disputes received from credit reporting agencies. They have to correct, delete, or verify information within 30 days of the dispute, or as I said, they'll have to delete it if they don't. And 4, they have to inform consumers about negative info, which is in the process of being enacted to their account. So that's when the collections regulations come in. Hey, you're 30 days past due on an account. Hey, you're now 60 days past due. Now you're 90, 120. Now we're coming to get the car. So, all those notices you get, there's a reason you get it, because it's the CYA, cover your ass aspect on behalf of the bank to meet these regulatory requirements. Consumer reporting agencies, the Experians, Equifax, TransUnions, they also have an important role to play, as they're the ones calculating the score and putting it out. So the CRAs, that's what we call consumer reporting agencies, CRAs must maintain reasonable procedures to ensure the maximum possible accuracy of the info contained within a consumer's report. They also must provide a consumer with info about them in their agency's files and take steps to verify the accuracy of the info disputed by the consumer. 3, if negative info is removed as a result of a consumer dispute, it may not be reinstated without notifying the consumer in writing within 5 days. And if removed negative info 7 years after the date of first delinquency, so again the 7-year fall off, I'm not going to pay you, we'll just let it charge off and I'll go hide out for 7 years, and then I'll finally get a new car because my credit finally jumped up 2 points after the delinquency falling off. So keep in mind, the 3 big CRAs, Experian, TransUnion, and Equifax, do not interact with information furnishers, the banks, directly. As a result of consumer disputes, they use a system called eOscar, which, if you dispute a credit card, right, through Experian takes your information, your dispute, and they simply just pass it along to a system called eOscar, which I believe all financial institutions use, which then houses the dispute, alerts the financial institution that they have a dispute, and then eOscar then starts the regulatory, clock. You have 30 days, to respond. And actually eOscar will even give shorter days because they have to calculate for processing time. So again, they alert the bank, say, hey, Experian received this, TransUnion received this for Joe Schmo on this credit card. Verify this information, update if needed. If it's inaccurate, report back, as such. So there's a lot of requirements, and it's a game of just pass the buck. And so once the bank responds on eOscar sends it back to the Experians, and then they update the credits, whatever, and then they alert the customer, say, hey, so-and-so bank updated your credit file. This is the outcome of the investigation. So it's all regulated. it's very important to monitor your credit reporting. Everything you do in life financially is pretty much traced by your credit report. If you go bankrupt, good luck with your credit. If you get a car repossessed, good luck. If you just stop paying your bills, good luck. Your credit's going to tank. And again, 7 years is a long time. It's almost 2 presidential terms just to somewhat recover your credit score. So don't fuck it up. Pay attention, pay your bills, don't get in over your head. And if you are a little under the weather credit wise, learn the act, know your rights, know your protections, and know that you have a right to see why the information on your report is the way it is. So don't be afraid to dispute through CFPB, through the credit reporting agencies and the financial institutions yourself. If you do it to a financial institution for your own records, I would guarantee you do it in writing. You'll thank me later. On behalf of Mynt, thanks for listening to today's deep dive on the Fair Credit Reporting Act. We'll be back. I hope you enjoy your day, stay well, and we'll see you next time on Mynt.